I'm Eddie Sanaji, and welcome to Your Finance TV's Crypto Revolution, covering all things crypto and digital assets. We are here with Adam Blumberg, co-founder at Interaxis. Adam, how are you, mate? Welcome back.
I'm doing great, Mehdi. Thanks for having me back. As we say, always something to talk about in the crypto world.
Do you know what? As I was putting ideas together over the last couple of days, and we share our notional page on some ideas and such. There just seemed to be an awful lot of things to talk about, and it was hard to drill things down into a core bunch of topics. But that's why you got to tune in, week out, guys. Make sure you're on top of it. Like, subscribe, stay on top of the content, and that way you won't miss anything in the world of crypto.
Exactly. And Mehdi, the interesting thing about all these topics we're going to discuss today and all the ones we talk about over and over again is crypto, the term we use to label all this has gotten so big. And you and I have talked about adoption and use cases. We've talked about macro factors and how that affects the prices of assets like Bitcoin and ETH. And it's just almost gotten so big that, yeah, there's always something to talk about. And it's really hard for you and I to distill it down to a relatively short 20 minutes of what topics are we going to hit.
Well, having distilled it down, we are full motion in the distillery this week. So, over the last several weeks, we've definitely seen, a big focus on Bitcoin pricing, everyone hanging in there when a spot ETF will be approved or won't it be approved. But while this has been the focus for many, those outside the US have been moving and grooving and getting on with things. Let's kick off with Thailand. In Thailand, the fourth largest bank, K Bank, they bought $100 million stake in a crypto exchange, Sartang or Satang. My pronunciation is probably quite off on that. Which is another example of TradFi dipping into DeFi. Diversify. We always say diversification of business is key to one survival in the long term. So K Bank, well done. Adam, have you been looking at any of this stuff going on in Thailand?
Sure. Look, the funny thing is, Mehdi, we talk a lot about Asia being a big crypto hub, and obviously Asia is huge. So for me to say that is a little bit silly, but we specifically usually talk about Southeast Asia. We talk about Japan, Hong Kong, Singapore, and now Thailand coming in. I don't think you and I have discussed at all, but you're right. It's the Southeast Asia play, I guess, is saying, look, if we're in a country, Thailand, surrounded by all these areas where people are into crypto, they're using it. We see great use cases coming out. We've talked about Japan and Hong Kong in the past. And then we see, investors that want to get in. This is, as you said, a TradFi bank going, well, we can either dig our heels in and don't want crypto to happen, or we can diversify our business and know that this is where our customers want to go, and we better be the ones to invest in it and be a part of it. Otherwise, it's going to take business away from us. So, as you said, kudos to the bank there in Thailand for recognizing that and wanting to be a part of it. And I think it will likely be a better solution for the investors there, for the people of Thailand, because it's a combination likely, once they get this all said and done, after their investment is done, I assume there's going to be some mixing of the bank plus the exchange. So people are going to be able to go directly from their money in the bank to the exchange and back and forth. There's probably going to be some help with custody. There's probably going to be some help with regulation there. We could see all that coming because of this investment.
So, it's putting them again on the map, another foreign entity that's getting involved in crypto and DeFi universe to have a better offering.
Right.
So, and in that same vein, Hong Kong, right? So there's another TradFi institution, Standard Chartered, which is, I believe, headquartered in the UK, my alma mater, pushing into the APAC as well. So they're focused on Hong Kong. They launched their firm Zodia in Hong Kong. And this is what's interesting about this story, right? Is that they're allegedly, I don't want to say allegedly, they're addressing the demand being driven not by retail, by institutions. So I thought this was very interesting that they're seeing the institutional side as well, which again, we've always discussed that that's kind of what we're more focused about because it has been such a retail driven market. To have institutional buying is what's going to create longevity and stability for this asset class. So, what do you think? What do you think they're seeing?
I think they're seeing in Hong Kong, we've talked about this. Hong Kong at one point was very anti-crypto, and then all of a sudden they switched really quickly and started putting in some crypto-focused regulation. And of course, Hong Kong being such a big money center over in Asia, that we've seen money flow in to crypto there. We've seen hedge funds open up there now. And this exchange Zodia has already been in Asia, right? They're already in Japan and Singapore, I believe, and I think Australia. And so this is just Standard Chartered going, look, Hong Kong is another big money center there because there's this institutional push for crypto in Hong Kong. And remember, it's been an institutional push in Hong Kong because the retail investors weren't allowed to be in crypto for years. So this is kind of the first push crypto in Hong Kong, and it's very institutional. So Standard Chartered, just like we saw the bank in Thailand going, well, we're not going to be left out of crypto in Hong Kong. There's a big need for it. There's a big need for custody. There's a big need for institutional abilities for over the counter desk, for trading desks and such, and we're going to be the ones to bring it there.
Moving away from the APAC side, you mentioned there that obviously Hong Kong was anti-crypto. They kind of then, I wouldn't say embrace, but they opened the doors to introducing crypto in regulations and structure around that whole process. The UK's kind of been trying to do this as well, and it's been a big week in the UK for regulation. On the back of this, the UK Treasury actually released their final proposals for crypto assets, outlining the UK government's intention to bring a number of crypto assets into the regulatory perimeter for financial services. And this is the first time they're doing that, and they've been working on this for several months anyway. So this is now the final proposal was released this week. Can't first of all, do you like the structure that they're kind of suggesting? And secondly, why can't the US just cut and paste what they're doing in places like the UK and just get on with things?
Well, question number one is I like what they're doing because they're actually moving forward, right? They're not the US, they're not infighting, and they don't think that this is, criminal money or anything like that. They're just basically saying, look, people want this. It's going to happen. We might as well figure out how to regulate it to keep money safe, keep people's money safe, keep innovation here. So I like all that. Having not read the entire proposal, because I don't generally spend my time reading all sorts of regulatory proposals, but from what I've read and from what I've read that other people have commented on, it's actually pretty good. It's saying here's what we're going to do to keep to keep money safe. Here's who has to be regulated. They're not attempting to regulate the innovation out of existence, and it's not so onerous, but it is kind of keeping with kind of UK regulation, UK financial regulation, and bringing it under an umbrella that is already looking at financial regulations in the UK. It's bringing it under a regulatory body that's already been doing that. But the fact that they have been more forthcoming and they've been more forward thinking about this than the US, and saying we need to get this under a body that knows money, that knows, has kind of looked back over the last 50, 100, 500 years in terms of how we use money and think about money. And we need to kind of regulate it that way, again, to keep people safe. I really like that. There isn't anything in there about DeFi. So they're not quite sure how they're going to do decentralized finance yet. The protocols, just basically code that allows you to borrow and lend, and code that allows you to swap. They haven't really addressed that part yet. But I like the fact that there is a final proposal, right? That's a huge step. This isn't like we see in the US, where we have initial proposals that you and I both know are going to take years to get through and a bunch of fighting, and we have an election next year, and we don't know when any of these proposals will get through. This is in the UK going, this is our final proposal. Everyone comment now. And the next step is this is going to be the law. So I like that they're moving forward there. And once we have, what we keep talking about, regulatory clarity, we can all move forward from there once we know. The tough part in the US, of course, is we just don't know.
Well, and you kicked off your initial statements with infighting in the US. But that brings a great story this week. More inside fighting, or I was thinking it's like a proper kerfuffle. Hester Peirce, the SEC commissioner, she's dissenting from the SEC's decision again, where the SEC filed a lawsuit against LBRY, accusing them of offering credit tokens, LBC, without registering them as securities. This is like a connection to connect the dots with Coinbase's lawsuit against the SEC. It's like we keep going through all of this, and the SEC has to address these things properly. But Talk us through like the inside fighting at the SEC.
Right. This was odd, and what I believe Commissioner Peirce said was it was disturbing to her, and part of the disturbing part was one, library was not a huge chain. It wasn't a huge raise. They didn't go raise $1 billion or anything. They were actually relatively small. So for there to be this enforcement action against them of all groups was kind of odd. And their, I think, $44 million fine they had that, of course, they weren't really able to pay. And between legal fees and everything else, they pretty much shut down in the last week. And what she was saying was it was too much, right? It was too much punishment for what they did. What they did wasn't much different than what a whole lot of other protocols projects were doing. And it's, I think what she was bothered by also was the SEC isn't looking at this and going, is this bringing any positive innovation to us? Is this bringing any help? Maybe yes, they created these tokens that kind of acted like securities, but the chain that they were trying to create and the reason why they were offering those tokens as incentive was to try to build something and try to innovate and have a better process. And so what for a little background, what library was doing, and I actually had some of these tokens at one point when I was playing around back in 2018 or 2019. And if I remember correctly, it was like you could post videos, for instance, you could post videos on their chain. So it lived on a public blockchain. My video would live on a public blockchain. And the more people watched it, I got tokens as an incentive. So it would be the equivalent of if more people looked at my tweets or more people looked at my LinkedIn post or more people looked at my YouTube videos, if I would get paid more, which I do get paid by Twitter and YouTube and such, if I choose to, based on how many people look at my videos or how many people look at my posts, they were just doing it with these library tokens instead of in dollars. Right. So that was the extent of it. It's not like they went and raised, $1 billion and didn't give anyone anything in return. It was they raised some money. They offered these tokens, which, by the way, were tradable on exchanges. And then I could go create content, put it up there and get compensated with these tokens. And what Hester Peirce is saying was that's not worthy of a $44 million fine. That's not worthy of this enforcement action. Why can't we work with these companies and figure out, are there ways to create incentives for you and I to post content that don't have to involve dollars and banks? Because that's where we have so many fees that it's not worth it for those companies to compete with the likes of YouTube.
Well, and first of all, thanks for breaking that whole offering down by library. It's actually very cool, and it's much like what everyone's doing with YouTube, but it's on chain, and it's very neat. I think it's a fantastic offering. It's a shame that they had to run into this. It feels like Gary Gensler is definitely the gift that keeps on giving. So maybe he'll get an addressing at some point. But let's hope the commissioner stays on top of it. Hester, you have us in your corner. So let's get some more sensibilities in this world. So one of the stories that actually caught my eye this week as well, which I really liked, was something everyone's always had concern about, right? Your locked USB. There was they cracked the code into a locked USB drive that had $235 million worth of Bitcoin. So I don't know if you saw this, but talk us through your thoughts around this if you did see it.
Well, from what I've read, they have the ability to crack the code, but that gentleman is choosing not to at the moment. If
that's the weird part, but like,
right.
So what's led through these events? Obviously, that they focus their whole efforts on this one particular wallet, but like what transpired
right.
over
so this was one of those horror stories, right? A guy had all this Bitcoin, he had it on a USB drive. Lost the key. And this is, he got a whole bunch of Bitcoin, I think, as compensation for writing some code back in 2010 or 2011 or something, which is worth $230 million now. And this became a story, I think, a few years ago when we saw a run up in Bitcoin, because at one point, I think this was worth 500 million or 600 million or something like that. And based on the wallet he had like 10 chances to remember his password. And he had been through 8 of them. And after the 10th chance, it would just destroy everything. It would kind of like disintegrate. And he had been through all the passwords he would have chosen at that time. And he was really hesitant to go any further. And so now this company is saying, look, we can break this. We can do it in a way where we're basically giving you an unlimited number of chances to crack the password. And yes, it's going to be kind of brute force, but we can get there because we've, we're going to give you not just two more chances. And I think he's saying, no, I'm not going to do that, because what if your code doesn't work and then it gets destroyed? I might wake up in the middle of the night one night and remember my password, and bam, my money is there. But if you touch it, one, could it be totally destroyed because your code doesn't actually work? Or two, are you going to steal my money? Once it's in there, are you going to move it to your own wallet? I'm never going to see you again. And of course, this company wants a cut, right? They want a cut for unlocking $235 million, which, by April could very well be over $500 million. And so it's very curious, because this gentleman was a story a couple of years ago, and we were all talking about it as the horror story. And now it's like, you can get your money. And he's going, I don't know if I'm ready for that yet. Like I haven't quite wrapped my head around the fact that you can break this. And, me as a kind of financial advisor, I'm going, well, I'd like to talk to this guy. I'd like to have a conversation with him and go, I think it's probably worth the risk. But like, his money, who am I to tell him what he should or shouldn't do with it? It'll be interesting to see if he finally allows them to attempt it, because in the absence of him, again, waking up in the middle of the night and remembering the password, he's worth 250, maybe $500 million one day that he can't touch.
That's going to be interesting to see how it pans out. I'm sure most people would be quite happy to share a decent portion of that with the people who can uncrack it, and hopefully we find a resolution here, and
Yep.
and more importantly, that it works.
Right.
So we've been all over the map this week. First of all, there's two things I want to wrap with. One is homegrown. Stanley Druckenmiller, old school investor. Even he's been out and about saying, "I don't own any Bitcoin, but I should." So he was George Soros's old partner. He set up his own hedge fund very successfully. So again, this kind of ties in with what we've always said. It's nice seeing adoption from institutional people, big names in the finance community. So yeah, I don't think there's much to really say on this, but it was just he was at a conference and he brought it up, the fact that he doesn't actually own any, but he should do. So good for him. Get on the bandwagon, mate.
Well,
And
interesting on that note, though, that he was having a conversation with Paul Tudor Jones.
yes,
So
sorry,
both macro hedge fund investors both look at the great, the world picture, see what's happening on a global scale. And Paul Tudor Jones he was the first big hedge fund manager that said, I'm going to add Bitcoin to my allocation. And recently he's kind of doubled down on that statement and said, absolutely, I need to have Bitcoin in my allocation. US equities are going to have a tough time. I need to have Bitcoin. And so having the talk with another macro hedge fund giant in Druckenmiller, who said, I don't have Bitcoin, but I should. And part of his reasoning was, I like gold for macro reasons. Young people like Bitcoin, and they're the ones with the money. So why would I not be in something very similar to gold, but that younger people with money like? Why would I not be in that? And so that's what he's saying. And maybe we'll hear in the near future that he has allocated a little bit to Bitcoin.
I think he will have, because it'll be interesting. Like as you say, that's the whole thing stems from their mentality as macro investors to be inflation protected. You kind of invest in gold, and that's how the viewpoint has always been for these older generation of investors. And they broke it down nicely. Younger people see Bitcoin in that same vein. So why not have an allocation towards it and move into the next millennia?
Exactly. And that's what those guys are seeing. They don't have blinders on and say, I'm not going to do this because of, these reasons that other investors say. I'm not going to do it because of criminal money, and I'm not going to do it because Elizabeth Warren doesn't like it or something. I'm really going to look at the numbers and the macro and the reasons for Bitcoin to exist and who's investing in it. And those are the decisions I'm going to make. And so it's interesting to see those guys that are the older gentlemen, the older investors that have billions of dollars under management saying, we like it. We're good with it.
Why not dip your toe?
Right.
Paul Tudor did. So again, as the theme of this today has kind of been outside the US almost on adoption and progress and advancement in one way or another. Another one, and we've been, Middle East has always been popping up in a lot of stories recently as a not safe haven, but an interesting point to broaden your horizons in the crypto universe. So it seems that now Saudi Arabia is they've got a company that's looking to invest 50 million in the metaverse giant Animoca. Is that right?
Yep.
Um, so they're kind of throwing money at a lot of different areas, not too specific into one particular sector or anything. And Web3, crypto, DeFi, everything. They're dangling their toes in everything. So let's go, Adam. Let's move over to Saudi.
Right. And this is if I'm not mistaken, this is a kind of city in Saudi Arabia that's being built out of nothing, kind of like we saw with Dubai and other places in the UAE. This is Saudi taking their money and going, we're going to completely design and create a city. And we're going to invest $50 million in the Animoca Brands, which is a big metaverse NFT brand company. And so maybe what we'll see here is some, what we call like digital twinning or something where you go, okay, I own land in a metaverse, or I own something in a metaverse, and that's going to translate into ownership in something like a condo in this city in Saudi Arabia. We might see something like that where Animoca is going to build, have a project that builds a metaverse version of this city, and I might get to own, owning land or owning property or owning a store or something in one is going to equal owning property in the real world. We might see something like that. But as you've said, we've seen the Middle East actually dive, I think, more into NFTs in the metaverse than any other area of the world, right? Southeast Asia has been a lot of like crypto and trading, and DeFi, where what we've seen, I believe, in the Middle East is more of this NFT and metaverse look. And again, this is parts of the world that we've talked about that are kind of taking the lead from the US. And I mean, taking it away, right? These are parts of the world going, look, the US isn't going to jump into this because they're arguing about regulation. We're going to take our money and invest fully in this, and we're going to jump ahead. We were behind in the internet. We're going to jump ahead of the US in crypto, NFT, metaverse, Web3, whatever it might be. And so this is a really interesting play with Saudi Arabia building this city out of nothing and partnering with Animoca to maybe do something metaverse related, likely related to the city.
Well, it's something definitely to watch because I think it's very exciting to tie in the NFT universe into real world, or IRL, as the kids say, right? So I think this is again a project that's being embraced by the Middle East, and it's just a shame that these things aren't really. They've kind of been put on pause here in the US for the large part, purely because of regulatory overhang. So hopefully we can get through some of this over the next months, years, however long it takes, and we'll get back onto the race and start chasing after the Middle East and Asia and playing catch up. But Adam, as always, thank you so much for sharing your thoughts. It's always a pleasure.
Right, thanks for having me, Mehdi. Great to be here.
And before your viewers run away, make sure you check out Adam's course on digital assets and crypto education, interaxis.io. Until next time, thank you for watching and good luck investing.